Stocks exhibited a rebound after an initial dip on Tuesday, although the overall performance of major indices remained mixed as investors eagerly awaited crucial inflation data set to be released later in the week. Nasdaq shows resilience. Despite a relatively modest gain of 0.09%, equivalent to nearly 14 points, ending at 14,857.71, the Nasdaq managed to recover impressively. Notably, the index retained the entirety of its 2.2% surge from the previous day and even added a marginal increase in value. Noteworthy performers, Nvidia, renowned for its AI and gaming chips, extended its remarkable positive streak by gaining 1.7% on Tuesday. This followed a substantial 6.4% surge on Monday, driven by the anticipation surrounding the commencement of the CES Tech Conference, while other prominent tech giants, often dubbed the Magnificent Seven, displayed a varied performance. Both Amazon and Alphabet achieved gains of approximately 1.5%. Mixed results for S&P and Dow. The S&P encountered a modest decline of 0.15%, settling at 4,756.50, and the Dow dipped by 0.42%, equivalent to approximately 160 points, closing at 37,525.16. However, it's important to highlight that these indices experienced a significant recovery from their session lows. Conversely, the Russell 2000, representing small-cap stocks, witnessed a substantial decline of 1.05%, concluding at 1968.04. While this index displayed promise during the market's upswing in November and December, recent performance suggests a return to its more typical behavior amidst the sluggish start to 2024. Implications of upcoming inflation reports. The market's future performance is highly dependent on the release of key CPI and PPI inflation reports scheduled for Thursday and Friday, respectively. Following the December meeting of the Federal Reserve, investors initially harbored hopes for a rate cut in March. However, the committee has aimed to temper these expectations. While investors initially overlooked these comments, they have now turned their attention to them. As a result, the upcoming inflation reports hold considerable significance, overshadowing remarks from Fed members. My opinion, both the CPI and PPI are projected to continue their downward trajectory in terms of lower inflation readings. Nevertheless, any deviation from this trend, be it a slowdown in the downtrend or even a slight increase, might indicate to the Fed the necessity of delaying their initial rate cut, possibly pushing it from March to May. While it's difficult to envision any substantial alteration to the Fed's expectation of a minimum 75 basis point rate cut this year, the ongoing debate primarily revolves around when the rate cuts will commence. Continued declines in inflation would expedite the initiation, while slower declines or a potential uptick in inflation could postpone it. Conclusion. As the market navigates its recovery, investors eagerly await the forthcoming CPI and PPI inflation reports, which will play a pivotal role in influencing the trajectory of stocks. The ability to adapt to changing inflation trends will determine the timing and extent of potential rate cuts by the Federal Reserve, shaping the market's future path. We invite you to subscribe to our channel to receive a daily stock market summary and information to our powerful stock screening, designed to help you discover potentially lucrative investment opportunities. Thank you.